Welcome back to Alpha Recap, your end-of-day rundown from stockalpha.ai. Markets have closed. We're unpacking the biggest moves from today. And as always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to cover. Legal headlines, a volatile chip tape, and some heavy volume names that traders were watching all day.
So, what really stands out here is the regulatory backdrop. Apple entered early settlement talks with the U.S. Department of Justice on that antitrust case, according to Bloomberg. Ryan, give us the quick read on why that mattered today.
Yeah, honestly, I was a bit surprised by this one. A potential settlement for Apple can reduce legal overhang for a mega cap, which usually calms some of the valuation anxiety. But details were thin, so desks modeled a range of outcomes rather than a single clean fix.
Right. And the market reaction was muted, which tells me people are waiting for more clarity.
Exactly. It finished the day with only modest moves around Apple. Not a fireworks moment, because settlement terms, any fines, or structural changes still need to be spelled out.
At the same time, the U.S. tightened visa rules for foreign students and journalists, coverage from investing.com and the National Press Club, and that added a different flavor of regulatory risk. Who feels this the most?
Universities, media outlets, and companies that rely on foreign talent. You can think of it as a near-term headwind for enrollment, staffing, and even advertising dollars in some cases. Analysts are parsing second-order effects, staffing costs, international enrollments, revenue tied to foreign coverage, all that.
So one headline could lower uncertainty for a megacap, and the other raises uncertainty across a bunch of smaller revenue streams. Interesting contrast.
That regulatory tightening became a theme for the day, and it bled into other sectors too, as folks reassessed compliance risk.
All right, now let's pivot to the tape. Semiconductors led some big moves. Lam Research and Intel were called out as market cap movers amid a chip sell-off. What did traders see?
We saw outsized volume and sharp intraday swings. The chip weakness pulled NASDAQ lower. The index finished the day under pressure, and it spilled into growth names and microcaps. That classic concentrated sector risk turned into broader liquidity dynamics.
Open finished the day down about 3.8% on heavy volume, about 143 million shares. BitO's ETF also saw massive flow. About 553 million shares changed hands.
Those are huge volume prints. When you get that kind of activity, it's either news-driven repricing or pure flow volatility. Traders were watching whether Lam and Intel moves were headline-driven or an early signal of a broader semiconductor repricing.
And those big swings can do more than move stock prices. They can change index weights, options flows, and even ETF rebalancing decisions.
Right. You get a feedback loop. Upstream moves in chips can drag on growth names, and then ETFs catch some of that pain through passive flows. It's contagious.
That contagion showed up in a bunch of highly traded small caps. New was down about 0.5% on roughly 181 million shares. EOZer slid about 3% to 3 cents on about 156 million shares.
Yeah, that tracks. Heavy volume with price moves often signals either a tape story or a liquidity squeeze. For short-term traders, it's active. For longer-term holders, it's a reminder about risk controls.
Quick reaction segment.
Lots of noise today.
Hold on, say that again?
Noise and opportunity for flow players.
Moving into financials. Bank of America announced preferred dividends payable in August and September across multiple series. And Morgan Stanley filed a Form 144 indicating planned insider sales. Break down why income investors and desks care about these filings.
Preferred dividend calendars matter for income strategies. They affect yield calculations compared to common stock. And Form 144s are watched as supply signals. Alone, they're not market moving, but clustered insider selling can change near-term sentiment.
Right. Check the SEC record for the percentages. Analysts flag some odd entries as possible outliers. Always verify primary filings.
Absolutely. Data cleanliness matters. A weird number in a filing can cause desk chatter until it's confirmed or corrected.
Let's hit a few other sectors quickly. Industrials and materials. Koch Ag and Energy Solutions agreed to invest with OCP to form a 50-50 joint venture in Jorf Fertilizers Company 1. Big picture?
That JV tightens private capital's link to fertilizer supply. It raises Koch's exposure to fertilizer capacity, which matters for commodity-exposed companies like Mosaic, CF Industries, and Nutrien. Closing milestones will be watched by commodity desks.
Healthcare. Medtronic launched a low-power magnetic switch IC, the TMR1370, pitched for continuous glucose monitors with multi-year battery life. And the American Pharmacists Association pushed the FDA to prioritize peptide oversight. Thoughts?
Medtronic's part could shift adoption curves in continuous glucose monitoring. Longer battery life changes device replacement cadence and consumable cycles. The APHA push signals tighter oversight for peptide suppliers, which could raise compliance costs for exposed companies.
Consumer and media. G Fuel did an X-Men 97 limited run tied to Disney+. PR Newswire flagged a slate of promotions, and there was a 3M Microsoft partnership note. Marketing activations are back on the menu.
Promotions and brand tie-ins are being used as near-term growth levers. They can bump same-store sales and lift short-term top line. For retailers, securing shelf distribution after a branding win is the next step to watch.
Quick rapid-fire items then. Whistleblower settlement with a private packaging firm on False Claims Act exposure. Kepler upgraded Segro with a higher target. And keep an eye on high-volume tickers for follow-up filings or company commentary.
The packaging settlement is a reminder that enforcement against private firms can still create spillovers for public peers. Expect peers to clarify exposure if it's relevant.
Okay, let's step back and summarize the patterns we saw.
First, regulatory tightening is front and center. Visa rules, peptide oversight, False Claims Act activity, and active DOJ antitrust posture. That tends to compress visibility and widen model dispersion. Second, volatility is concentrated but contagious. The chip sell-off rippled into growth and small caps. Third, partnerships and promotions are back as tactical revenue tools. Fourth, private enforcement can force public peers to reassess exposure.
So what are the practical things listeners should watch tomorrow?
Follow-ups on Apple, Bloomberg sources, DOJ comments, or court filings. Watch government agencies for official visa guidance and any company statements from universities and media groups. Track semiconductor leaders and analyst notes for confirmation of the sell-off's breadth. Look for company updates or SEC filings from the high-volume names we flagged, and monitor any customer qualification news from Medtronic about that TMR 1370.
And closing of the Koch OCP joint venture? That's a milestone to watch too.
Yeah, absolutely. Transaction close and any regulatory clearances would be the next material event.
Quick reactions.
Regulation dominated the tape.
Momentum flowed into small caps.
Promos are back.
Before we sign off, a few clear takeaways. 1. Regulatory headlines cut both ways. Some reduce overhang, others add fresh downside scenarios. 2. Chip weakness created contagious volatility that touched large caps and micro caps. 3. Watch filings and flow data for the high-volume names. Those prints often tell you whether moves are transient.
And remember, preferred dividend calendars and insider filings are technical but meaningful for income and sentiment. Also, partnerships and product wins matter for near-term revenue if they translate into distribution or customer adoption.
This episode is for informational purposes only. We're not giving personalized investment advice or recommending buying, selling, or holding any security. Analysts note that percentages and data should be verified in primary filings and official releases.
Thanks for listening. If anything raised questions, whether it's the Apple DOJ talk, Visa guidance, or the chip moves, check the filings and the official statements before drawing conclusions.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. See you next episode.